Hello and welcome everyone. My name is Julia Plaxina and I will help today my colleagues to coordinate our webinar, develop a webinar, convertible bond pricing valuation, risk. Thank you very much for joining us today. So before we move to the main part of our webinar, there are just a few housekeeping points from my side that I would like to cover. So at the bottom of the webinar screen, you should see a toolbar. So please use the toolbar if you want to access like a range of applications such as webinar materials, technical support, or completing a survey. Please click on the application and it should open on your screen. So also all applications are resizable and movable, so please feel free to move them around your screen so you can get the most good view of this application. Also, please submit your questions throughout the webinar via Q&A box, and our speakers will try to answer them at the end of the webinar. For the best viewing experience, we really recommend to close like any programs or browser sessions running in the background. As for recording, it will be sent to all who registered at the end of the webinar within upcoming 2 days till the end of this week. We really value your feedback, so please do complete the pop-up survey at the end of the webinar. Thank you again for joining us today, and Samuel, over to you. Thank you.
Yeah, thanks, Julia. Good afternoon, everyone. Good morning, good evening, depending on where you're connecting from. So welcome to this webinar on convertible bond analytics. I'm Samuel Schwalm. I lead the product team for instrument pricing analytics, and that's a service that delivers on-demand analytics and support Refinitiv and client workflow, like Refinitiv Icon, for instance. And I will cover that briefly later in the call. I'm joined today by Lamia Amrani. So Lamia is development manager of the financial engineering team in the data and analytics division. Among many other projects, she and her team have played a key role in exposing these convertible bond analytics, especially combining them with our data. And she will show the API in action a little bit later in the call using the Refinitiv codebook application. This API, this service leverages the ConvB pricing models that has been developed by our partner SuperCC. These analytics are already available in the Icon desktop, in the Refinitiv Icon. Maybe you're aware of that through calculators. We are now extending this collaboration with SuperCC by making them accessible from APIs. So Izzy Nelken, the president of SuperCC, is with us today. He will start by providing an overview of this market with a focus on its complexity and the data challenges faced by practitioners. So Izzy, welcome with us on this webinar. Thanks for spending some time today. And if you, whenever you are ready, tell us more about this market.
Yeah, thank you so much. So thanks for having me. It's been a wonderful collaboration because we found that Refinitiv has definitely all the data to evaluate convertibles worldwide, actually. So, you know, this has been a wonderful year in the convertible market, even though there was a pandemic, or maybe because of the pandemic or whatever. But you can see that just this year, just for the beginning of this year until now, there's been huge issuance. Mostly, of course, the big ones are United States, China, and all the other suspects. So this is a U.S. dollar size, you know, in size of U.S. dollar issuance. And you can see here that for the first 40 weeks of this year, just to compare the first 40 weeks of 2019, first 40 weeks of 2020, and first 40 weeks of 2021, these are big years, and the market hasn't slowed down. It actually has accelerated, which is very interesting. Now the investors, the typical investors in that asset class are, we divide them into two broad categories. One is either mutual funds or that buy the convertible outright, and maybe they expect to just earn the interest, maybe they expect a little equity kicker, maybe they want to look for, they expect an equity rise. And then we also talk about hedge funds that actually buy the convertible and hedge it by shorting the correct amount of shares, sort of a delta hedging strategy, if you will, or very rarely vice versa. And between those, there are many subtypes of strategies, either for long-only holders, like the mutual funds that we mentioned. You know, some of them focus on income, some of them focus on equity growth. There are many subtypes of strategies also among the hedge funds. Depends on the holding period, how much they hedge, what type of holdings they have, what industry groups they cover, what geographical areas, and so forth and so on. It's a really endless variety. Just as an example, in the, you know, we're talking about April 6, 2020, in the middle of this pandemic. In the worst case, the Carnival Corporation, the cruise line, we all remember that the cruise, people were stuck in some ship in Japan in a cruise, and you know, nobody wanted to go on a cruise forever in their lives again. And then they issued almost $2 billion of a convertible senior note. And believe it or not, that convertible was oversubscribed. So maybe people didn't want to go on a cruise, but they certainly were willing to buy that convertible bond of Carnival Corporation. And just recently, they have, you know, the company has recovered so much, they have launched a partial buyback of its rescue convertible. So one of the interesting things from our point of view, both as modelers and data scientists, is that convertible bonds require a huge amount of data for valuation. They are what we call, they eat a lot of data, as we would say. So what are we talking about? We're talking about data that is what we call instrument-specific information. Instrument-specific information such as terms and conditions. What is the coupon? What is the maturity? Is it callable? When are the call dates? Is there call protection? Is the convertible has a COCO? And so many other different features. And then we talk about market information, which is all the items that have to do with the financial markets. So you can think of interest rates, you can think of stock prices, in some cases currency rates, and many other pieces. And some of the interesting feature of convertible bonds that some of the instrument-specific information actually changes based upon what happened in the market. And Refinitiv does an excellent job of keeping tabs of that. For example, for dividend-protected convertibles, the you know, there's some changes, or there's some changes in the conversion ratio, or based on the dividend that was paid or not paid, dilution and not dilution. So this is so there's a lot of amount of data for valuation, and it's also challenging to model because the problem has very complex built-in numerical instabilities. So here you see a range of data from Refinitiv. This is not a complete list. This is just a partial list. And you know, we've been involved in convertible bonds since for many years. Here's one of our books that covers convertible bonds, and some other books that I've written or edited. So I think there's now 8 of them. So here's an example of a first model. One of the first models we could see, this is from 1968, just to show you kind of like a little slide rule. In 1973, another slide rule. In the year 1994, we published at Risk Magazine a tree-based model for modeling convertible bonds, and later on in the year 2000, we talked about a quadrinomial or quaternary tree or quadrinomial tree that each node had 4 points coming out of it. So now I'll turn it over to Lamia, and she can talk to us about the API.
Actually, before the demo, I think Samuel has also a couple of slides. Samuel?
Do you hear me?
Yes.
Yeah, okay. Yeah. So, all right. So let me, I don't know which slide is on. Okay, perfect. Yeah. So, all right. Yeah, as I was mentioning in the introduction, so the convertible bond analytics that you may have been using on the Refinitiv icon as in the calculator is now available as API, so which means it can be accessed from development environment, integrating into various workflows. So it's part of the Refinitiv data platform. It's hosted in the cloud, can be accessed through request response. It's JSON based, and it's part of a suite of analytics for various type of instruments like bonds, like equity options and others, and also deliver pricing data like vol surfaces or zero curve, interest rate curve. So all this type of data which are in fact ingested into the pricing model. So that's the Refinitiv data analytic platform. The key benefit, or one of the key benefits, if we go to next slide, and back to what Easy was mentioning in terms of the complexity of the data, but and the amount of data which is needed to value those instruments, is that we have made the work to combine the models and the analytics. So for getting directly the answer. So if you think of the pricing of a convertible, so you, as Easy mentioned, you would need to go and get the term and condition. So we have that. You have to go and get some curve, some credit spread, maybe some FX rates, equity volatilities, and I'm sure I'm forgetting a few. And you have to, curate that or manage that and combine that with some pricing analytics. So we were doing that for our own purposes in our desktop product. So we know exposing those ready-made analytics as a service, where we just have to send the instrument QZIP or ISIN, and you would get the analytics. Of course, you have the ability to customize, to override, to do some simulation, and that makes the tool easy to integrate, for various workflow, especially think of pre-trades when you analyze, or maybe more in the post-trade when you're more interested in the market value. So that's the concept behind our Refinitiv data platform offering and the instrument pricing analytic API. I guess I don't think I have much more to say. I think the best is to show that in action. So I guess Lamia, if you're ready, we can go through that, and I'm sure we'll after this demo we'll talk about the models more, and we'll take questions.
Sure. So hello everyone. I have just shared my screen. So in the previous webinars, we had mostly used Jupyter notebooks for all of our demos for the Instruments Pricing Analytics API. In today's session, as Samuel mentioned earlier, we wanted to show you a different way to access our APIs, which is Refinitiv Codebook. And by the way, if you have missed our previous sessions on how to use IPA to either build rate curves, volatility surfaces, or to price different types of instruments like interest rate derivatives, like options, or like some other types of bonds, please check our developer community portal, where we have the recordings for all of those previous sessions, as well as a lot of articles and materials that can be very helpful. All right, so back to our demo. Like I said, today I'm going to use Codebook. And so Codebook is a cloud-hosted development environment that allows you to easily and more quickly build your workflows and access the different APIs that are available for you. So as usual in this first part, we are going to get our session ready, our endpoint ready to start sending the requests. Since I'm using Codebook and Codebook is desktop here, we're going to open a desktop session. However, later on, when we will share these samples with you, when you want to be, we want to play with the sample. If you are not using Codebook, then all you have to do is just activate the non-desktop environment, and then this code will get your credentials and will open a platform session for you. So once we have the session open, the next thing we need to do is to prepare the endpoint. And here we are using our financial contracts API. I think by now you must all be very familiar with this financial and contracts API. So this is the API that we use for any analytics related to financial instruments. We're keeping it really consistent and similar to use based on the different instruments that you need to evaluate. So with that, we have just here opened the session and set the endpoint. We can start building our request to price convertible. So this first request, even though it's a bit long, is very simple one. So basically here, simple request, but we wanted to also reflect what Izzy just mentioned about all the features that we can have in the convertible market and all the types and aspects of convertibles that are supported by the Instrument Pricing Analytics APIs. So in this request, we have kept a very simple convertible bond into listed stock. We have one with soft call features. We have a puttable. We have perpetual convertible. We also have one here with mandatory conversion, one with contingent conversion. We've also kept dividend protection and accretion. So to build the request, as usual, we just have to fill our universe with our instruments. And to do that, so we create a set and a list of instrument definitions. And in each instrument definition, you just need to specify the instrument code. So instrument code here can be either RIC or ISIN, like I'm using here in this one, or basically any convertible identifier. You just have to use it here in instrument code. And there we have our universe. So before we send our request, the next element that we need to define is the list of fields. So again, fields is just how we tell the service what outputs we want to be returned in the response. So here we have kept a selection of the fields that are available. There are more, but the idea was to show you the type and categories of fields that we can return using the convertible bond pricing service. So some of them are more descriptive fields related with the terms and conditions that we for each bond, or related also to the default values that are that have been selected by the service. Some are more pricing related. We have outputs related with Greeks and with sensitivities, and also probability outputs, so probability of vector size, probability of conversion, and so on. So with that, we can send this request. That's all we needed to create. So basically here we are sending the request, and then we're just getting our response and putting that into a data frame so that we can take a look at the response, and that's what we would get. Basically here we have our 8 bonds, each with a different feature. And by the way, here we can recognize them using the instrument tag. So instrument tag is just a user-defined string that allows you to recognize your bond. So basically, if we take this one, we see that here we have an instrument description that can be very helpful. We see that it's an Air France convertible bond. We see the coupon, we see the maturity, as well as some of the features. And there we have it, the list of the other descriptive fields that I had requested. We have the prices, the sensitivities. And we also have these 2 fields, error code and error message. So here they are empty because everything went well, but this can be very interesting. Let's say if we had one of our bonds that is not active anymore. So this is where we would have the information why something was not computed, or if at some point we missed something in the request, like we forgot to set correctly an instrument code. So that's where we understand what happened and how we can change basically the request to get results. So that was the first sample. Now let's move to our second example. So this one here is a little bit more advanced, because if you think about the previous request, we basically just provided a list of identifiers, and then we were able to get a fair price. Now, this fair price, so to compute it, the service needed to retrieve a whole set of market data and a lot of market factors that can have an influence on the price. And then we used one of the libraries that SuperCC provides for us to be able to compute that fair price. What we're going to do in this next sample is we're going to do the calculations, but in the other way around. So instead of computing a fair price, we are going to assume our own value for the price, as well as some other parameters, and we want to compute an implied value of one of those market factors that had an influence on the price. So the example we selected here is the calculation of implied spread, credit spread. So to do that, we just needed to add implied spread BP here in the list of fields. I've shortened the list of fields, just to keep our focus on implied spread, but please know that you can have all the outputs you want. Anything we just seen before can be added here as well. On the universe side, we're not going to change anything. I've kept just one of the bonds that we have just seen earlier. But then on the pricing parameters section, this is where we start adding more elements. So basically here, I have defined my own assumed value for the price. So I set it to 102. Same for the underlying volatility that I'm setting to a flat value of 50%. And basically what I'm trying to do here is compute an implied spread using these values. So when we run the request, and here it's the same thing, we send the request and then we get the response into a data frame so we can take a look at it. And here we have it. So so we have an implied spread of 577 basis points. You might be wondering now, did we absolutely need to define the price here in this request and the volatility here in order to compute the implied spread? The answer is no. But mainly I've kept it here just to show you all the flexibility and all the control that you can have using the pricing parameters section. So basically, if I didn't define the price here, we would still be able to compute an implied spread because the service will still go and get the market price for this convertible and use that to derive the implied value of the credit spread. So what we've done here with implied spread can also be done with implied volatility. So we can have here implied volatility percent, and we have the ability to define our own value for the price, our own value for the spread. So that's basically it. So just keep in mind that pricing parameters is a section where you have the control on all the parameters that allow you to pre-configure either the model or to pre-configure some of the way we select the market data that is used for the calculations. And I think with that we have reached the end of the demo part. I think next Izzy is going to tell us a bit more about the models that we're using for all of these calculations.
Just to reiterate, what this hides from the user is all this complicated data.
Do you hear me? Do you hear me, guys?
Yes.
Yeah, no, just maybe a quick, because there was a few questions. One is very,
okay.
I mean, maybe it's interesting for all the participants. I think Julia said it at the beginning, but the notebook will be posted on the developer portal a little bit later, so it'll be accessible by anyone who attended the webinar. Yeah. Sorry for the interruption. Back to you, Izzy.
Yeah. So I just wanted to reiterate that what this whole marriage of data and the model does, and the IPA does, is it hides from the user all this complexity of getting. So, for example, you have a convertible bond. You have to get the interest rates applicable to that convertible bond. You have to get which is the stock that's tied to that convertible bond. And keep in mind that the stock might be in a completely different country than where the country that's issuing the convertible bonds. We call it dual currency convertible bonds. So the stock might be in a different currency, and so it has to go get the stock, then the volatility of the stock, et cetera, et cetera. All this complication is basically hidden from the user. Is done internally. So we now that we have all this data, what do we do with it? Well, our model is based on actually a system of partial differential equations. So, I mean, most people hate one differential equation, but this is based on a coupled system of partial differential equations, two of them that you have to solve them together. So that makes it even more complicated. And so why even go there? There are some advantages to it because the main advantage is that the bond part and the stock part of the convertible have to be discounted at different interest rates. So we usually say that the bond price is discounted at the risky rate, which is the rate plus the credit spread, and the stock price is discounted at the risk-free rate that does not include the credit spread. And unless of course it's not a convertible, it's an exchangeable, and it has to do with the escrow arrangement, et cetera, et cetera. So this is all taken into account, but the actual rate is determined by the problem itself and not by some assumption of the user, let's say. So the difficulty, so this has a lot of advantages. The difficulty is that the system of partial differential equations, coupled partial differential equations, is harder to solve than a single partial differential equation. So we developed a lot of resources to actually solve that. We used some advice from some professors from University of Toronto and University of Chicago as well, which was a lecturer there in the math department. So we relied on some experts' help to help us design some algorithm. And we came up with an extremely fast model. So the partial differential equation advantage has that you can do unequal time slices. You can take relatively large time slices where nothing of interest happens, and very fine time slices where something interesting is happening, like, for example, a cocoa or a coupon payment or some discrete event. And we use a combination of Crank-Nicholson and implicit methods if it's interesting to anyone. And we can do also unequal stock prices. And then it calculates the prices and Greeks for many stock prices at once, and results in very smooth prices and Greek curves. So this is only all good features for an implementation. And you know, here just a few features that are supported. Of course, the list is much longer. As Samuel said, you can see some screenshots from Refinitiv Icon that has it, and this is like an example of what a smooth price chart looks like versus a price chart that's not very smooth for a particular convertible. So I mean, I don't know that a lot of people are very interested in systems of partial differential equations, so I'll try to keep this section short. But anyway, thanks very much for your time, and of course, you're always welcome to ask questions or reach us or in any other way. Thanks a lot.
Yeah, thanks, Easy. I think there was a question on AT1, LT2, which I think you know. So I don't know if you. The question is about if we cover that. So I guess we do not. But if you can just.
Right. So the AT1 and AT2. So the COCO that we have is based on stock prices. So if a bank stock, I mean, so we don't really explicitly model the bank capital, because that's a completely different animal, and it needs a completely different data set for particular banks. It's certainly, if there's interest in us doing that, we can certainly explore it. But right now, our COCO is only based on stock prices. So if you assume that the market values the bank correctly, the stock of the bank correctly, the stock price of the bank correctly, then that's the way that our COCO works. Otherwise, you know, if there's an interest from the clients, of course, we can always add that feature. And there's another question I see: are retail investors allowed to purchase convertible bonds directly, or is the only option to purchase through mutual fund or hedge fund? I think you know, a retail investor can buy them either through an ETF. There are some ETFs that do convertible bonds, like, for example, CWB in the US, and the retail investor can buy them, but I don't think you need a certain size. You can't buy them like with a $30, you know, a very small investment. These are typically sold in larger amounts.
Back to maybe the model. There's a question if you've seen on the Crank-Nicholson PDE. So it's to know if it's applied to all CB types, or maybe there are flavors or.
Oh, okay, yeah. So we talk about we do Crank-Nicholson, a combination of Crank-Nicholson and implicit method, and this applies to all PDEs, but so it applies to all of them, but the specific method that is applied really depends on the problem itself. So it's not like. So the problem itself determines when we apply some Crank-Nicholson steps and when we apply implicit steps. So there are time steps. Some of them are done with Crank-Nicholson, some of them are done with implicit method. I think there was another question here about...
A follow-up on the cocos if you've seen, yeah.
Yeah, that's right. Yeah, I'm getting there. 1 second. Yeah, so the cocos are run through the same convertible bond model, except that, of course, the convertible bond model knows it's a coco, so it takes that into consideration. And yeah, I think the assumption is that you know, you need a stock price. You need a stock price for those convertible bonds. So we assume that the convertible bond has an underlying equity price, or at least equity index price, or something like that. It has an underlying. So I think that again, right now, non-listed banks, we do not support them. But if there's a request for that, we can always add that.
I have seen a very specific one on Chinese onshore convertible bonds. I guess this all depends on the features and on the data, but
that's something for yeah. I mean, if the data is available in Refinitiv, we actually cover it. So it really depends on the data.
Yeah, we'll check this out. I guess if they are
we have validated actually convertible Chinese convertibles. So basically, all the ones where we have the data, maybe 99% were already supported.
Okay, so good. So we'll. I mean, it's be possible to try out a few ones with the ISIN or any local code. Yeah.
Yeah, I see. Have you thought about modeling SPACs with this model? We actually model. I think the questionnaire refers to warrants on SPACs, and actually we have a warrant. We have a model for warrants on SPACs, and if there's interest, we'd like to. We're always happy to increase the relationship with Refinitiv. So. Yeah, if you ask Refinitiv to, we can always combine the model with the Refinitiv data. So Stefan, yeah, sure, tell them.
Okay, so we'll discuss that.
We're always happy to add.
All right, I think we might be. Yeah, I think we're good on question. I think there's one about how do you define the probability on your model? So I don't know if you've covered that.
Okay, yeah, that's right. Thank you very much for that. Yeah. So basically, if you can imagine, there's a whole array of things that can happen to a convertible bond. It can mature for phase, and the company just pays the amount at the end. The holder can convert it early. It can be forced to convert. A call might be callable it might be called early and forced to convert. The holder might put it, et cetera, et cetera. So the model actually runs through all these scenarios, through all time frames, and it notes what happened at each location and the probability of it happening. So you have, I think you have 6 events that can occur within the convertible bond. What if it's alive or not alive? What will occur? And we calculate the probability for each one. So, for example, it might be, and that's actually a very interesting question, because the convertible bond might have a lifetime of 10 years. You know, the stated maturity is 10 years, but all these events could shorten the expected life of the convertible, let's say, to 2.5 years. So even you think you're going to get 10 years of coupons, but you don't. You get you might only get 2 years of coupons, 2.5 years of coupons, if that's the expected life, because it's going to terminate early based on all these events, being called, being matured, et cetera, et cetera.
Okay, so
Right.
unless there's any, yeah, you want to show something? Sorry.
Yeah. So here, if there's any, if somebody remembers some question later on, they could always, there's some contact.
Yeah, I think exactly. Yeah. I think unless there's any last minute questions, I think we are reaching the end of this webinar. So I don't know, Julia, if there's anything you need to do right now, but if not,
we have a poll, right? We have a poll and some questions.
Yeah, we have a quick poll for the audience, and also we have just a few, a question we would like to ask you. So, dear audience, just a second, I will push the slide to the screen. Okay, so that should be okay now. So if you are interested in receiving or in getting our monthly Developers Digest from us, so just you can subscribe, and you will get this digest just every month, as far as I remember. So I will give you just a couple of seconds to complete the poll itself. So please click yes if you would like to get any additional information from us. If you are not interested, you can click no. Thank you for submitting this survey. I will give you just a couple of seconds. And also we have a poll, a question to you. Just a second. I will push the slide. Okay. Some technical issues. Bear with me, please. Okay, let me try this one. Yeah. Okay. So we have a question. So there are a lot of government bonds that have negative yields. Will there be convertible bonds with negative yields? So we would like to know your opinion. So what do you think, yes or no? Okay, some more, extra seconds to complete the survey.
Interesting, huh? So I don't know if you see the results, like
I see the number a little bit, so I can share. I will share a screen just in a couple of seconds, so you can also see the results.
Okay.
See any results? Where do you see results?
In the preview, but I think it's like alpha or close to that.
Okay,
so
wow.
It's
Nice.
undecided. So, oh no, it's a yes, no. Okay.
That's interesting. Okay, so
It's I mean,
Yeah.
very interesting.
Yeah, and now you can see the results. So Easy, over to you if you want to, if you have anything to add from your side.
okay.
All right, so I think we've
I
reached
just wanted to thank all
yeah.
the participants and thank also the Refinitiv team for putting this on. Thank you very much.
Yeah, thanks Easy for joining us today. Thanks Tamia for the demo, Julia, and thanks to our audience today. Yeah, and I mean, you'll be receiving links and you'll be able to access the content of this presentation, including the notebook. So thanks a lot for your time today, and we hope to see you soon on another webinar.
Thank you so much.
Bye.
Again, yeah, thank you so much. Stay in touch and goodbye. Thank you.